Hi, welcome back to the channel. My name is Brad. This is Firefighter's Financial Toolbox. Today we're going to talk about the 10 most tax-friendly states for retirees. You guys, this is an article from Kiplinger.com. And remind you, this is tax friendliness for retirees, not actual lowest cost. All right, so if you're thinking of moving to a different state in retirement, you'll want to consider many things: climate, proximity to family, friends, access to quality health care, a host of other important factors before picking a new location. But make sure you add taxes in the new state to the list of considerations. Total state and local tax burden is one place that thousands of dollars per year can add up. That can make a huge difference when you're trying to stretch out your retirement savings. So this is going to take a look at the 10 states that impose the lowest taxes on retirees. Check out the list below. The results are based on estimated state and local tax burden in each state for two hypothetical retired couples with the mixture of income from wages, Social Security, traditional and Roth IRAs, private pensions, 401k plans, interest, dividends, capital gains, etc. So one couple had $50,000 in total income and they owned a $250,000 home. The other had $100,000 of income and owned a $350,000 home. All but one of the states on our most tax-friendly list completely exempt Social Security benefits from the state income taxes. So that is a huge start, right? Most also allowed an exemption for at least a portion of our hypothetical couples' other retirement income, be it private pensions, IRA withdrawals. You see it. So we're going to get into it. So number 10, we start with Tennessee. So in Tennessee, the state income tax range is 1% on interest and dividends. The average combined state and local sales tax is pretty high, 9.55%. The median property tax is about $636 per $100,000 of assessed home value. And there is no estate or inheritance tax. So when you leave your estate, if there's left over, that needs to be something to think about. So let's see. There's no broad-based income tax in Tennessee. Only interest and dividends are subject to the state's limited income tax. Plus, anyone 65 years or older with a minimum total annual income of $37,000 or less, or 68 if you're married, is completely exempt from that tax as well. It's also waived if you're at least 100 years old. So if you're going to be a centenarian, you get a tax break. There's also no inheritance tax, and property taxes aren't too bad. So for the couple with the $250,000 home, it would be about $1,590 per year, and for the $350,000 home, it would be about $2,226. So pretty good there. What they does say is be careful of the sales tax because it is the highest in the country. So that's where they're picking it up, right? They're always going to get some taxes somehow. And their tax, let's see, groceries are not subject to full tax, but they are taxed at 4%. So something to think about, right? Because you're going to have to eat. All right, number 9, Arkansas. The state income tax range is from 0.75% up to 6.6% if you make over $79,300. So that would be pretty easy to get up there. The average combined state and local sales tax rate is pretty high again, 9.51%. The median property tax, $612 per $100,000. That's not too bad. And again, no estate or inheritance tax. Let's see. Let's start with the way state income tax rates are structured in a way that favors retirees with lower incomes. Because the top earners are paying 6.6, and it says that it actually has gone down to 5.9. Social Security benefits are tax-free, and it allows an exemption of up to $6,000 for other types of retirement income. They also have pretty low property taxes. That $250,000 home would be about a little over $1,500, and $350,000 would be about $2,142. The state's Achilles heel, again, sales tax, which is the second highest average combined in the country. So they're got to be careful what you're buying. You got to buy food. You got to buy stuff for your homes. All right, number 8, Arizona. This is where my wife and I are retiring to, actually right in this area. All right, so the state income tax range is 2.59% up to 4.5%. Okay, you guys, the top rate is 4.5. Right now in Oregon, I'm paying 9.9. So that's cutting my income tax in half when I retire. But I digress. The average combined sales tax rate is about 8.4%, which is on the higher side. Property taxes, again, low at $617 per 100,000, and there is no inheritance or estate tax. They also exempt Social Security benefits, plus up to $2,500 of income from federal and Arizona government retirement plans. It's up to $3,500 if you have a military retirement. Unfortunately, my state is Oregon, so my retirement will not get that benefit. Income tax are relatively low, as we said, and estimated property tax on $250,000 home is only a little over $1,500. That's wow, that's less than half of what mine is now. For the $350,000 home, it's about $2,160. Also, homeowners age 65 and over can freeze the value of their property tax for real estate purposes for taxes for 3 years if they've lived in the home at least 2 years and they have an income under $37,500 or $46,900 if you're married. They do have some other property tax breaks available for seniors as well. Sales tax is above average. And as I said, Arizona does not have an estate or an inheritance tax, so we can leave that on to our family. Number 7, South Carolina. So the income tax state range here is from 3% to 7%. And that's taxable over $15,400, you guys. So you get up there pretty fast. The combined sales tax rate local is about 7.46. And property taxes are real low, $545 per 100,000. And they also have no estate or inheritance tax. Social Security benefits are exempt. In addition, taxpayers age 65 or older can exclude $10,000 of retirement income or up to $3,000 for taxpayers under 65. So that's nice. If you retire before 65, you still get a little bit of help. Seniors can also deduct $15,000 of other taxable income or $30,000 for joint filers. Plus, veterans who are at least 65 can exclude up to $30,000 of military retirement income. And it's $17,500 under 65. So that's good. Low property taxes help. That $250,000 home, just $1,363, and $350,000, $1,900, you guys. That's really nice and low. Some bad news, sales tax are on the high end in South Carolina. Statewide, it's 6%, and they can levy up to as much as 3%, but the average is about 7.46. All right, number 6. This one surprised me. Colorado. I think of Colorado as a higher tax state, but let's take a look. So the state income tax range is a flat rate of 4.55%. That's not bad. Average combined state sales tax and local is about 7.72, so that's lower than we've been at. The median property tax is low, $494 per 100,000. And they also have no estate or inheritance tax. The state's median property tax rate is the third lowest in the nation. That's huge. So that $250,000 home has a little over $1,200 in taxes. And the $350,000, $1,700. That is crazy low. I like that. Income taxes are reasonable in the Centennial State also. Colorado voters approved a measure on the ballot to reduce the state flat rate from 4.63 to 4.55. The state also limits how much revenue it can grow from year to year, lowering the tax revenue growth is high. Let's see. Sales tax will bring retirees back down to earth, though. But local governments can tax as much as 8.3%. And their combined average is above normal. or above the national average. All right, number 5. This one doesn't surprise me. This is Nevada. Nevada, I know, has no income tax at all, so that helps. But the average combined state and local sales tax is about 8.2, so still not as high as some of the other ones. The median property tax rate is low, $533 per 100,000, and they also have no estate or inheritance tax. So a lot of these states have a lot of the same things in common, you guys. Obviously, they don't tax Social Security because they don't tax any income. It also has the 4th lowest property tax in the U.S., which is nice. The $250,000 home, you're talking a little over $1,300, and $350, $1,866. It doesn't have any special property tax breaks for seniors, but it's so low to begin with that it's pretty good. And that's the 12th highest combined, well, it does have the 12th highest combined sales tax rate. So that's where they're getting some of their. All right, but I also know that, remember, Nevada does not put sales tax on groceries. All right, number 4, Wyoming. They again have no state state income tax. The average combined state and local sales tax is 5.33. That's low. The property tax median is about $575 per 100,000. Again, pretty low. The Equality State is number 1 in our rankings for the most taxally friendly state for middle-class families. Again, no estate or inheritance tax. Sales taxes are low in Wyoming too, with the 8th lowest combined sales tax in the country. And you don't have to pay too high of property taxes. That $250,000 home would be about $1,400, and the $350 would be just a little hair over $2,000. Really cheap, you guys. All right, number 3. This one also surprised me. District of Columbia, which technically isn't a state, but we'll roll with it. All right, so the state income tax range, 4% up to 8.95. So that's almost getting up to Oregon's range. Average combined state and local sales tax, 6%. So that's not too bad. But the median property tax is about $564. So not hugely expensive, but up there. It does have an estate tax in D.C. And the general cost of living is high. The average tax burden for retirees isn't. But let's see, the city doesn't tax Social Security payments, but it does tax most other forms of retirement income. Second, qualifying for the city's income tax credit for property tax to be paid make a huge difference. The refundable credit is worth up to $1,200. Residents age 70 and older are eligible for the credit if they make less than $75,900. And the threshold's less for younger at $55,700. Let's see. Property taxes are pretty low, 8th lowest in the country. So other than the cost of living being high, the taxes aren't as high. And this is number 2. Again, first saw it, I was really surprised. But remember, this is talking about taxes for retirees, not cost of living overall. So number 2, Hawaii. And this surprised me. The state income tax range is 1.4 up to 11. So it climbs pretty fast. If you're single and you're over 2,000 or married 4,000 above, you're at 11%. So that's pretty high. But most of us in retirement aren't making $400,000 a year. So let's keep going. The average combined sales tax rate is pretty low, 4.44%. The median property tax is only $280 per 100,000. That really surprised me, you guys, because it's an island and there's no more land. Hawaii also does have an estate tax. Okay, so let's take a look at it. Hawaii has one of the lowest average state local tax burdens. The U.S. higher income seniors may get caught in lofty income tax rates, but retirees won't pay nearly that much. Hawaii actually has 11 income tax rates below 11%. Social Security benefits are tax-free, so that's help. Housing prices are high. Property taxes are actually low. So you're paying more for the house, but if you pay it off, you're a little ahead. All right, let's see. Annual property tax bills for $250,000 home, if you can find it, is $700. And for the $350,000 home, again, if you could find it, would be just $980. Depending on where you live in Hawaii, seniors can also qualify for some property tax relief. Sales taxes are low. Here we go. It does have a estate tax on an estate worth more than $5.49 million. And those tax ranges from 10 to 20%. All right, number 1, Delaware. Again, not one I would have thought of, but this is only taxes on retirees. So they have a state income tax range of 2.2 to 6.6%, and that's over $60,000. They don't have a sales tax. Okay, one of the few states like Oregon. Oregon gets it all in the income. Median property taxes, not too bad, $562 per thousand or per 100,000. Congratulations, Delaware. You're the most tax-friendly state for retirees. No sales tax, low property tax, and no death taxes. So no estate or inheritance taxes. Delaware is one of the only a handful of states with no sales tax. Let's see. You'll also want to spend your money on the grandkids because property taxes are low. That $250,000 home would cost you about $1,400, and the $350,000 home would cost you about $1,967. School property tax credit. If you're a senior, you can qualify for a tax credit of up to $400 if you've lived there for 10 years. So you're getting a little bit of break on paying tax to the school because you don't have school-age kids anymore. The only downside, and it really isn't that bad, are middle-of-the-road income taxes. The rates are comparatively reasonable, and residents age 60 and older can exclude up to $12,500 of pension or other retirement incomes. So that's nice. So what do you guys think? I think some of these names on the list really surprised me. Some of them I was kind of expecting. But remember, as I said, this is the 10 most tax-friendly states for retirees. But we're not talking overall taxes. We're talking our overall cost of living. We're talking taxes. What do you guys think? Think you're of these states? Are these any you're considered? Let me know in the comments. And once again, I'm going to ask you to smash the like button, make it turn blue. If you're not already subscribed, hit the red button, ring the bell. You'll get notified every time I make a video. All right, we'll see you. Thanks.